Good morning, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here on this 28th, Friday the 28th of August, 2020. You know what? Gold and silver's just beginning, really. I'm going to explain to you guys why. The U.S. Treasury bond right now. The Fed is they're having to. They're not wanting to, but they're having to keep the yields down low. And this is going to require yield curve control out to the long end of the yield curve, out all the way to the 30-year very soon to keep these yields down. This gives a negative rate of return on your investment on these treasury bonds. And the reason why is inflation is starting to heat up. And as inflation heats up, they are messing with the inflation numbers. To get the real inflation numbers, you have to go to a site like Shadow Stats. That's where you can get the real inflation numbers. Their inflation numbers are all messed up. They're far lower than what they should be. They're saying we have under 2% inflation right now. And in real fact of the matter is inflation's probably running over 5%, right? But they're trying to keep this inflation down right now by depressing the Main Street economy, the real economy, the economy that we all live in is being depressed. And this is deflationary. And they're using it. The Fed's using that as a tool to offset what they're doing. Meanwhile, we get a real negative rate of return on your investment on these treasury bonds. What we're looking at is a treasury bond that's yielding maybe 1% across the board, on a long-term bond. And, your inflation rate is running, so you're getting a certain percentage there of negative rate of return. If your inflation rate is really about 6% or something like that, maybe even as high as 10%, well, say 10%, well, you're getting a 9% negative rate of return on your investment, And this is why gold's starting to look so attractive. Just one of the reasons. This is rocket fuel for gold. But, silver is even more precious commodity because there's actually less in the earth. I mean, less in the storehouses. In the earth, it's about 9-to-1, a ratio of 9-to-1 to gold, or 10-to-1 to gold right now. So there's a lot of silver in the earth. But it's in the earth, and they need it for industry. They've been wasting it for years. We're starting to see the move that I said would come, where the gold to silver ratio would start to go back to a more normal ratio. We're starting to see that, but we're also seeing the gold price go up higher and higher. So you guys have seen a pretty good little increase in the price of your silver so far. It's going to get bigger. It's going to get better. It's going to get brighter. Because the gold to silver ratio is going to continue to move. I'm anticipating it's going to cross 50 or even 40 in the not too distant future, and the gold price is going to be really a lot higher than it is now when that happens. And I really believe that we are going to see silver prices in excess, triple digits, in excess of triple digits. In a not too distant future. I really believe it. I believe in this. I believe it's going to happen. And the economic conditions to make it happen are in place right now. So for these guys who say silver's in a bubble or gold's in a bubble, no, it's not in a bubble, but the stock market's in a bubble. So let's get started. Let's take a look at the charts and open the charts right here. Take a look at what's going on. We got a silver price at 68 cents up today, 27.63. That's what it's riding at today. And we're going to take a look at the gold price here. Gold price is up $41.20. So that's a pretty big day for gold. 1969 we're at. And it's still climbing right now. It's heading back up for $2,000 again. It broke through $2,000. It's absolutely ridiculous. They are still, it's getting harder and harder for them to manipulate the price of gold and silver. Basically what's happening is they're losing control over the price of gold and silver. So now they want to move their currency over into a digital form. and do away with cash and everything. They're going to try to hem everyone in to this new digital currency so you can't get out, and so you can't escape. And basically, gold and silver, real coins, is going to be like a one way to escape. They don't want that. They don't want anybody to escape their net that they're putting out. It's like a trap that's going to keep people in a state of perpetual poverty, so that we're going to have a society in the end that's basically the rich and the poor will never be able to escape their lot in life, just like it was in the Middle Ages when they had feudalism. It's going to be exactly the same thing. You're never going to be able to escape because you're not in the new digital currency. It's going to be impossible to save. And they're going to try to close all these doors out, all these exit doors, like gold, real physical gold and silver. The price is going to skyrocket to the moon on this stuff, and they're going to put some sort of ways in so that you can't escape their digital prison. That's basically what it is. The new digital currency, and they'll be able to see everything that you purchased with it. So if you do try to escape, the first thing they're going to do is they're going to look at your wallet and they're going to say, what did you buy with it? It says here you bought gold. We're giving you too much money. And they'll turn your digital wallet down by 50% or whatever. If you've got enough money to buy gold, we're giving you too much. We don't want you to have that much money anymore. They'll just at the flick of a switch, or they can even turn your wallet off, and you can't buy nothing. You can't buy wheat or bread or jam or anything. They turn your wallet off. I don't know. I mean, how could a person even survive in the end if they turn your wallet off? And they put an X next to your number, and they basically blackball your wallet. What kind of a system we're moving into? It's to me, it smacks of these Orwellian type novels and stuff. I mean, it's just absolutely ridiculous. But the people, as long as the people stay dumbed down with these cell phones and don't pay attention to what they're doing, they can get away with all this stuff. And once they get it in place and get it running smoothly for themselves, then they can really start turning the screws. It's the way government does. They'll put in a law, and that's not really, the people don't really like it. They put it in anyway, but they make it small, like maybe some type of tax. And they'll make it small at first, and so it's almost not noticeable. And then later, after it's been in for a number of years, then they start turning the screw. And so this is the way they think we're all stupid, but we're not stupid. We just got our heads in these cell phones all the time, and on the computer screen all the time. And they're forcing that more and more. Work from home. Keep your head in that computer screen all day long. Don't think about anything else. I wouldn't be surprised to me if they come out with a new campaign the government does called Don't Think, where they tell people, don't think. Just do what you're supposed to do and don't think. Don't ever think. Anyway, I'm ranting a little bit, aren't I? Okay, look. Here's the cryptocurrency price today. 360 billion, 59% Bitcoin dominance. And we're seeing a Bitcoin price of 11,518. These cryptocurrencies, I think they're getting ready to come into a bull run with gold and silver. But I think the gold and silver are going to experience, and I've been saying this for a long time, first. They're going to be first. But the problem with this is, for gold and silver to absorb all of this fiat money, and basically that's what's happening. Whenever anybody buys silver, they're putting their vote in against fiat and for silver. Well, for gold and silver to continue to absorb all this money, you have to have it to sell. It's a physical commodity. And when they run out and there's none left, then what are people going to turn to? I used an analogy years ago. I talked about a fair, and I said a country fair, and the Women's Bazaar. They produce a whole bunch of pecan pies and fried chicken and everything, and they put it on a table. And they got a giant pot over there, like a 1,000-gallon sized pot cooking of corn. So the ravenous crowd comes in. They're waiting for the ravenous crowd. The ravenous crowd shows up, and in 5 minutes, all the chicken and pecan pies are gone. They're going to eat them first because that's the tender morsels. But then when they're all gone, then they're going to eye that corn. And that's the way it's going to be with gold, silver, and cryptocurrencies. Gold and silver are like the chicken and the pecan pies. They're going to go first. Then when they're all gone, you ain't going to get nothing. Then they're going to go after the corn, which is the cryptocurrencies. And there's such a ravenous crowd coming. Picture 1 million people coming to the fair, and they're all hungry. That's the crowd that's coming, going to pour into this space. It's going to be too much for gold and silver. They're small markets. They're not going to be able to take it all. Look, there's like $22 trillion in the U.S. banking system right now, sitting there in bank accounts all over the place, you know. That's a lot of money. You know, if even a quarter of those people say, hey, you know, my money is being hidden taxes, inflation, my money's being ruined by these new digital currencies now and everything. I'm going to pull that money out and try to buy something of value that's going up in value rather than just sit on it. If that, just a quarter of those people, it's just going to explode the price of all these things. Let's take a look at the Dow today. 28,597 today. And it's up again, 94 points up again. It's getting into a hyper bubble territory. I wonder if it'll cross its old highs before it finally pops. I've been expecting this thing to pop. Now, when this thing pops, in the next month or two, I expect it to pop. When this thing pops, you know, it's not going to go that far. It's going to pop fast, and the Fed is in there ready to catch it and push it back up again. I don't think it's going to last very long. I think this thing's going to pop, and I don't think the Fed's going to let it drop like they did last time as far. I think they're going to catch it earlier. I don't think it's probably not going to drop more than 5,000 points before the Fed rushes in and catches it. And then they start to push it back up. And that's, I think, where we're going to make new highs. We're going to make new highs in these markets after it pops, and then it goes back up. Because they're going to come in with bigger, brighter stimulus. Okay, now let's take a look at crude oil. $43.06. It's up 2 cents on the day, so it's not moved that much. I don't think that the trouble in the Gulf with that hurricane affected the price of oil that much, really. Now the hurricane's gone. When that hurricane like that moves through and stuff, it makes it a little bit difficult in the Gulf for their big oil rigs and stuff, you know. But it's gone now, and so I don't think it had that big of an impact. Let's take a look now at bonds and rates. And we see the yield curve falling today. But, you know, we're not seeing it fall as much as we've seen it rise the last few days. So we're looking at a 10-year at 0.71, and we're looking at a 30-year at 1.49. The Fed's in there, I think, right now, making these yields fall. That's yield curve control, but I don't think they're really doing it openly yet. They're not right out there saying, hey, we're doing yield curve control yet. Are they? I don't know. Anyway, I think it's the Fed doing this. I think this is movement by the Fed. Let's take a look now at the U.S. dollar index, and we see a fall in dollar today. It's fell almost 1 basis point. I mean, it's fell almost a full point, almost a full penny. It's 92.29. It's fell 0.71 of a penny today. And that's against the euro. I mean, that's the biggest part of the dollar index basket is the euro. What's so special about the euro that's better than the dollar? You know, I mean, that the dollar's falling against the euro. That shows how weak the dollar is, how weak the dollar's getting. I'm going to tell you, there's going to be a little bit of a war coming on here for the United States to hold its position as the world reserve currency. China's going to want a bit of that action, I'm going to tell you, because it gives an awful lot of big status. It allows you to print your money into infinity. and beyond, and it allows you an awful lot of perks come along with being the world reserve currency. Okay, guys, thank you for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.